Quick snapshot view on the F&O side. Max is the one we want to focus on now. Steady performance. Stock, though, is, I think, seeing a bit of a dip. Ekta is here with details. Ekta.
Well, yes, Max Healthcare is under pressure in today's trading session on the back of the margins, which came in lower than what the street had anticipated. Now, the reason why the margins were pressured is because the company's added 2 hospitals in the past 1 year, one in Dwarka, and they acquired JP hospitals last year as well. So these 2 new hospitals are operating in their first year, and the margins are at around 12.5%. So the company did indicate to us that the new hospitals have pressured margins as they are just in the first year of operations. They expect the new hospitals' margins to ramp up to the existing hospitals' levels soon enough. Now, in terms of the other segments of the business, such as the international revenue, they have grown over 30% this quarter and have indicated that they have in the past been growing at around 25 to 30%, and they expect to continue growing at those similar levels. Max Labs and Max Home, both those segments which the company runs, have been growing consistently as per the company, and for Max Labs, they do expect the margins to probably improve to around 17 to eventually 20% odd levels. They are interested in acquisitions, but as and when the opportunity arises. Possibly the key spanner in the works for the company this time is the 2 new hospitals, with their margins possibly pressuring margins on a blended basis.
Absolutely. Ekta, thanks very much for that. Abhay Sohi is Chairman Managing Director at Max. We spoke with him. Just listen in.
In the last year alone, we've added 2 hospitals. One is Dwarka, which was a greenfield project and which we commissioned in July. And we acquired JP Hospital in Noida. This was in October, November. So this is what I categorize as newer hospitals. So if I see existing hospitals, then you had an increase in EBITDA per bed. You had of about 7%. You had an increase in ARPOB of about 5%. There's been an expansion of margins as well from 25.8 to 26.2. But the 2 new existing hospitals are operating presently in the first year at about 12.5% EBITDA margins. And, they've sort of, as expected, would drag the overall ARPOB down, at least in the first couple of quarters. And as these ramp up, and that's exactly where the opportunity is, both the margins as well as profitability will expand from here on.
Let's hop across to Vivek. He's